Good morning or good evening, good whatever time it is you're listening to this. I'm going to be going over TLT and kind of where it's standing right now and what I'm expecting out of the long run. And what I mean by long run is probably the next couple of months. Now, I'm just going to preface this video. The narrative in the world of treasuries changes and evolves really quickly, so everything I say in this video can be absolutely thrown out the window in a couple days, depending on if we have, say, President Trump say, a specific thing, or sign a specific thing, or if we have a Fed member say something specific. Treasuries are really, really impacted by the yields. I mean, they're entirely driven by the yields, and the yields are extremely sensitive to data sets. They're extremely sensitive to world events. So there's a lot that can change the thesis and change what's going on. But with that said, we are going to first talk about the moving averages and the Bollingers before I really discuss anything else with the thesis. So going over the daily chart, we have the 5 mile currently at 91.40. We have the 10 mile at 90.06. We have the 20 mile at 89.35. We have the upper Bollinger at 92.28. We have the lower Bollinger at 86.42. And since the price closed at 92.43, it's very likely we're going to see the 5 mile open around 91.40, maybe even 91, or not 91.40, 91.70, I mean, maybe even 91.80, give or take. But that support's being brought up pretty significantly. And just going over the daily chart here and showing the moving averages and Bollingers, we had that really, really huge move to the upper Bollinger, and then we pulled down. We tested the 5 mile again. And what happens after a 5 mile test is either we head back up to the upper Bollinger, or we pull down to the 20 mile. Now, it's looking very likely that the market's going to continue trying to do this upper Bollinger push. So with that said, I'm expecting a higher high. So I'm expecting today's session very likely to have above the 92.48 mark. If not, then we will just continue looking towards the 5 mile, which is at that 91.40 to 91.70 mark. And going over some of the data sets this week that can influence, TLT and as a whole, we have the manufacturing or the global manufacturing data from the PMI, ISM data on Monday. We don't have anything Tuesday. Wednesday, we have the PMI, the non-manufacturing data. So basically, Monday's data sets are the manufacturing, Wednesdays are the non-manufacturing. But we have the beige book at 1 p.m. I've been really looking forward to the beige book because the last one we read in December gave us some really mixed signals. We were reading from the Fed how, well, no, it wasn't December, it was in January. But we were reading how the Fed was seeing strengthening in the labor market, strengthening in essentially just the economy as a whole, when we've been seeing the entirety of 2024 for the most part showing significant weakness and even showing consumer weakness. So I'm really looking forward to the beige book. The beige book will help clear up some of what's going on because what the beige book does is the Fed, central bank districts go out to local businesses and they ask them essentially, what's going on? Are customers still buying? Are they slowing down? Are they picking up? Is hiring going well? Are you feeling the need to fire people right now? Etc., etc. It's just trying to get real on the ground data from these companies. So to me, that's probably one of the largest data sets we can get right now for TLT. That's going to tell us a big part of this story of what the Fed is anticipating to do next. Because you have to remember, the Fed right now is in a position to where they're kind of just stopped in their tracks, and what that really means is that when they're saying they're waiting for data, that means that they don't know what to do next. That means that there's no plan implemented for what to do next. That means that they're either waiting for the labor market to start crashing and burning, or they're waiting for inflation to pick up, and um, they have the tools to work around one of those two right now. The tool that they have available to them right now is essentially just rate pauses to hold these higher rates and essentially see which scenario plays out. One of these scenarios does really good for TLT, the other one kind of melts TLT. And if we're seeing the market getting stronger, if we're seeing the labor force getting stronger, then TLT is going to suffer. But if we do start seeing some of the labor market failing, we do start seeing some economic weakness, then TLT is going to be in a really good spot. And I do believe that's going to be the case overall. And just to go off of my rant a little bit, going back to Thursday, um, we don't have really any important data sets on Thursday that's going to change TLT too much. We have the weekly jobless claims, but for the last few weeks now, they've been meeting consensus for the most part. I mean, last week they came in a little higher. If that trend continues, then we will see TLT continuing to hold strength. That's a big reason why we are seeing a lot of that strength earlier last week. Now on Friday we have really huge data with the non-farm payrolls and the unemployment rates. As always, the unemployment rate is huge for treasuries, so very likely we're going to see a big move out of that. And we also have Powell testifying. Uh, so yeah, that's going to be a really huge move for TLT. Now, to kind of discuss TLT more, the Fed has been in a stance between all their speeches and everything that they have been very mixed with what they're saying. And what I mean by that is that some of the members are saying that essentially quantitative tightening, which is the selling of securities by the Fed, um, is going to be coming to an end, very likely around May to June. Now, other members of the Fed are saying, no, that's not going to happen. We're going to be continuing to sell treasuries all the way through the rest of the year. Now, why is this important? When the Fed stops selling treasuries, it means that the market no longer has the buying I don't want to say buying power, that's not what I mean. The buyer's strength. They can no longer dictate the yields. So seeing the yields continuing to move up and up and up won't be something that will happen once the Fed starts enacting or stops enacting quantitative tightening. Um, and what happens after the Fed stops quantitative tightening is that we move towards a stance of QE, which is quantitative easing. Now, when we have QE, it's the Fed buying treasuries from the market and buying them into their security holdings. So what that does is that puts money back into the market and back into the economy, and that reduces the dollar. Um, while we're on the daily chart, I did want to go over the ADL because the ADL has been going up significantly, and we can actually see the buying volume over just last week. It's been we haven't seen this type of volume since what all the way since last August. Uh, yeah, this is some of the strongest buying we've seen in quite a while. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. Now, what I'm looking forward to is for this cup top at the 94.15 to fill out and, give us that cup. And then from there, we'll very likely build a slight bearish structure in this area, create a handle. So Probably like a head and shoulders type of thing. Pull downward. And from this cup bottom, we can actually pull downward all the way to this bottom buying channel, which is currently at 86, which would, be in that 86 to 87 range. I don't assume that'll be where we pull down to. Very likely we would pull down to closer to this 89, 90 area because we have quite a lot of liquidity built in that area. And from there, I would look for, bullish structure, pop us back out of that area, and take us up towards, breaking out of this 99 area. And what would happen from there? I'm gonna retract that line. I'm actually going to go from there to there. Is that we would then see this larger inverse head and shoulders. The liquidity from that would play out. And then this very large cup would form all the way, up to that 99, 80 mark. And that would be what would be the structure to break us out above the 100 again, because we'd form a handle from there, and then we could start, heading back up towards that 100 plus area. So that's kind of the anticipation I have for now. I know that's a little convoluted overall. Why did my channel change? It belongs down there. I want to show you the weekly chart though, and kind of what we're looking at for that. One moment. All right, so for the weekly chart, and I don't know why this changed colors and everything on me. So we have this very large, and this is going to be a major buying channel, but we have this very large major buying channel from the top of this selling structure. And we've been following it really strongly, but we've also been following this selling channel for an extremely long time. This selling channel has been holding us uh, basically since the top of COVID. Um, we're now at the very bottom. We've been building liquidity for extremely, extremely long time. I mean, this has been liquidity since 2022 up until now, and we're right at the point where we're going to break out of this selling channel or um, come down and reject it and retest the bottom of that buying channel again. It's very likely we're going to break out of the selling channel as treasuries have been beaten down for an extremely long time, and almost everyone in the treasury market has been wondering when the bounce is coming, and this very likely is going to be that bounce that will break us out of it. Um, as I mentioned, we just have to go structure by structure and um, allow some of these smaller structures to build out. We need this cup to fill. We need the handle to fill out. Um, from that handle filling out, we then fill the larger cup and go from there. Uh, we just need to be cautious about what the Fed is doing, um, because the Fed doesn't know what they're doing, and that leaves a lot of questions open for us, trading treasuries. Because if the Fed doesn't know what they're doing, then, how are we supposed to know what they're doing? It's extremely likely that the Fed is not going to continue allowing bonds to break down. Uh, the yields overall have been pulling down, even with the tariff scares. We had the tariff dates changed from April 2nd to, I believe, March 3rd or March 4th, so they're starting this week. We'll see how the treasury market reacts to that, but very likely um, we've already gotten the worst of it, and we're very likely going to bounce upward and see a lot of this upward support taken. And this is my weekly chart because it doesn't allow me to show the daily chart because it's just, it goes back so far. But TLT has nothing but massive gaps upward to take. And I mean, this is massive gaps. Let's even go to a yearly chart. I want to hide the drawings for a second. we haven't been at this level uh in TLT since I believe 2014. So it's an extremely, extremely good area to buy. And even on the yearly chart, right, you can see the ADL just shooting upward over this last year, or since the beginning of the new year. So a lot of money is entering into bonds again. Very likely we're going to see this structure fill out. If we see this cup head upward and actually break upward, then we break that larger selling channel. If it rejects here, then we're going to continue within that selling channel. With that said though, I'm bullish on treasuries, but I'm still a little hesitant just because there's still a lot of inflation driving data sets and just overall things in the market right now that can cause inflation to head upward, which would help beat TLT downward in price. So what I suggest is that if you are being bullish on TLT, hedge some puts here. Like hedge, I can't talk. Hedge some puts in this area and do it, take leaps. Don't be afraid to take options out till 2026. They're very cheap. I believe you can get a pretty good contract for about $200 to $400. Um, and that's gonna hedge your entire downside. Any downside you get, you just buy shares and buy the dip, and that's how you play treasuries. There's not a whole lot of downside left. I mean, we've been fighting this level all the way since 2023. Um, so it's very likely we're not gonna continue to break downward more. It's very likely we have the liquidity to head upward. And with that said, I'm gonna end the video here. I just wanted to do a short video on treasuries and kind of where I see them going, because I know many people are asking me if I was buying the dip and everything. Yeah, I am buying the dip. I'm just extremely cautious overall. But have a great day, have a safe trading day, and I will talk to you in the next one.